So the past week has been quite eventful and quite impactful for the rest of this year, as retail traders everywhere realize their potential and the promise of disrupting big finance and displacing institutional traders everywhere. So to bring to you some thoughts on this matter, our very own Checkmate is going to go in depth on this topic and really flesh out what it means for the crypto space. Before we get to that though, I just want to bring your attention to what Checkmate and I have been building and have recently launched, and that is ReadySet.Vision, which is an education platform dedicated to on-chain analysis, which we believe is a very compelling alternative to technical or fundamental analysis because it uses the underlying blockchain data to make accurate predictions and analysis of blockchain networks and their subsequent price action. So if you'd like to have a better understanding of blockchains and have better ability to predict where their price is going, well, that's exactly what on-chain analysis represents, and that's exactly what ReadySet.Vision was built for. So check it out in the link below, but for now, I'll turn it over to Checkmate, who will give you his thoughts today, and tomorrow I'll release a video about my thoughts on the recent Wall Street Bets mania that's going on right now, and what that means for the rest of the year. Welcome to Ready Set Crypto. This is your brain on blockchain.
Just to close out January 2021, in case anyone was concerned that we were going to have a quiet and simple and back to normal year, this week in particular has shown, I think, one of the most significant events that we've seen in markets in some time. It's amazing that this has been an event that's been building actually for years. Interestingly, the more you look back and understand about this Wall Street Bet story and what happened with GameStop, this is a trade that's actually been in the works for, over a year by the original guy who's essentially conceived of it. But in my view, what we saw this week in the Wall Street Bets short squeeze of GameStop, I think it's changed the world of finance forever. I think when it comes to the scale of what, Wall Street and Main Street, right? So the two competing groups, so much has changed in that dynamic. I mean, all of this has been building up, but people are really relating this particular event, the Wall Street Bets movement, and it is rapidly becoming a movement. It is a political movement, and it is being compared to Occupy Wall Street. This is essentially Occupy Wall Street, and some have said with teeth. Right, this is the Main Street taking a bite back and starting to really throw a collective punch back at the established system. So I don't think we fully understand the implications of what's coming out yet. I would certainly be paying attention to, and in the podcast recommendations at the end, there's a couple of perspectives that I think are worth listening to. But I would certainly be very aware of what comes out from some of the very smart macro thinkers over the next couple of weeks as people fully analyze and understand the magnitude of what's just happened. I believe that this is just the first step in the iceberg. I think what we're going to see is much, much bigger than just the short squeeze on GME. I think we're seeing something very, very fundamental and foundational change in the market structure now. Certainly be planning for volatility, and I really do think that this is a tipping point in this 12-year macro cycle, essentially since 2008. Right, moving on to the 13th year, this is a moment that is probably going to be on the scale of Lehman Brothers in terms of defining the change in where this cycle is going. So let me preface this letter by saying that I've tried to absorb as much as I can. There's obviously a big story behind all of this. There is a lot of nuance and there's a lot of challenging things. So I've tried to just look at some of the high level stuff. And what I want to give you is more of my insights and what I'm thinking about as to where the puck is going. We'll talk a little bit about what actually happened during the short squeeze, but we'll spend a little bit of time just thinking about what could be the result of all of this. So I don't really think we understand the implications yet, but we will certainly find out. So the very, very high level view of what happened is basically a subreddit of retail traders, and inside that there's going to be people on every side of the bell curve, right? You're going to have the complete degenerates. You're going to have people who are extraordinarily smart in the retail space. There will also be hedge funds in there. There will be very, very smart financiers. There'll be all sorts of people in these forums, right? It was when this all started to blow up, there was 3.5 million people subscribed to that subreddit. It's since doubled. So in the last week, it's doubled to about 7 point something million. So essentially, the subreddit was a coordination vessel, right? People are talking and creating forums and chats, and eventually they all coordinated around what is probably one of the biggest short squeezes in history. And by no means has this short squeeze finished. It is very much still in play. And I would almost go as far as to say is that we still have a long way to go. I think the first step in this short squeeze has been initiated, but I really do think that we're going to see some serious volatility. I think GameStop's probably going to continue to go higher, but we'll look at some of the mechanics shortly. But essentially, retail has squeezed Wall Street. They've put them in a corner, and quite frankly, they have put Wall Street into checkmate. They have absolutely pinned them to the wall. There is nothing that Wall Street can do to that. Basically, they are at the whim at this point in time. I think we will see bankruptcies that come out of this. I think we will see an extraordinary amount of pain, both on the retail and on the institutional side as a result of this. But we've also seen people turn $50,000 into, 25, 30, $50 million, right? So people are going to win and lose in this thing no matter what. And really, this Wall Street Bets has become the face of something that is far larger than just a very crazy trade. It is becoming a political movement. It's becoming a line in the sand, and it is an example of the people really taking the power back, right, and actually putting their intelligence. I mean, ultimately, this was a very, very well architected short squeeze. They absolutely won this game of chess, and ultimately, this is going to be a signal that the little guy can push back. And in 2021. It just couldn't be more on brand and on message. So, in my personal view, this event feels like a precursor to a Lehman Brothers style thing. I think that we're going to see, as I mentioned, probably we've already got $70 billion worth of losses on hedge fund sides at this point in time. I strongly suspect that will continue to grow because every $70 billion that just disappears is owed to someone else, right? We have an unfortunate system where, modern finance is very much a Ponzi scheme of people owing everyone else money. And when a big firm goes out of business, well, there's no question that they certainly had debts to somebody else. That person now needs to write off that money, and you get a knock-on effect, right? The second, third, fourth order derivative of what is going to be the outcome of this is probably going to, I feel like the pin has just appeared. So, I could be wrong, but I would certainly be paying a lot of attention to some of the very smart people. I know Raoul Powell's going to put out a video soon that's kind of his take on things. He's expecting volatility and risk in markets. I'm also expecting volatility and risk. So I think that this is a really, really significant moment in time. Fascinating to watch play out. But this has been the general overview of what happened. So, talk about 2021. Reddit user Deep Fucking Value is our hero of the story in this particular point. Having headlines where you've got Reddit usernames as the blazing front line is just, it's so 2020, right? Welcome to the world where you can have complete anons that blow out hedge funds. But anyway, so this bloke started buying call options on GameStop. And he started buying them in and around 2019. So we're talking about over, almost 2 years ago now. So what he essentially identified is that GameStop, which is, I'm not in the US, so I'm not familiar with it, but we have equivalents, retail game shops where you go and buy your Xbox games and PC games and whatever else. We've got equivalents most part around the world. And they essentially identified that there was 140% of the outstanding float of shares sold short. Now, the way that you get to this position is by you naked shorting, and this is essentially where you borrow the stock from somebody and then sell it on the open market with the expectation the price will go down. You will then buy it back cheaper, and you owe the stock, right? Now, naked shorting under Investopedia is technically the illegal practice of doing that. So you are not supposed to be able to naked short like this. However, we have a system where 100%, more than 100% of all the shares, which essentially means that there is leverage on leverage on leverage on leverage. So this is a huge problem, right? So this basically means that if you can corner the market, which is essentially what Deep Fucking Value and his group of Wall Street Bets degenerates have essentially done, they have cornered the GME market. Because there is so much short interest, in the event of a short squeeze, which we are currently seeing, whoever is short must buy it back 150% of, right, 140% of the shares at whatever price the cornerer wants. If you want it for $10,000, then you got to pay $10,000. The most likely scenario in all of this is the hedge funds who are short are going to go bankrupt. My understanding is that they've already had bailouts from Citadel and various other financiers that are caught up in this. Citadel being, I believe, the biggest security clearing outfit in the world. We're talking the big guys, right? These are the people who run the world. So what Deep Fucking Value's trade was essentially to understand that if you buy call options, so for those of you who follow Doc's trading of call options, there's the delta. So the closer that an option is to being in the money, the higher the delta value is. So the delta value represents two things. If it ranges between 0 and 1, once an option is in the money, it's going to be a value of 1 because it's basically moving with the share price, right? Because you're now in the money, the option is worth whatever the delta is between the current price and the trading, what the option strike price is and what the stock is trading at. So it's going to be greater than 1, essentially, once you're in the money. When you're out of the money, if the stock is trading at $100 and you buy a call option at $200, the probability that it's going to get up to $200 is relatively low. So your delta value will represent that probability of how likely that option is to expire in the money. So what if you buy a call option and the delta is, say, 0.2, right? Very out of the money, very unlikely, 20% chance of it being in the money. Then the broker that you buy that call option off, each call option is 100 shares. If your delta value is 0.2, that means that the broker will buy 20 shares to cover their risk. Now, if that option goes up to, say price of the underlying goes up to some value and delta goes to, 0.3, that broker will then buy another 10 shares because now they're net neutral. So by buying a call option, even though the call option represents 100 shares, the broker doesn't physically buy that many shares. But as the options get closer and closer to being in the money, right? So they're buying super out of the call options. And you can see here that he's paying 50 cents, 60 cents, 30 cents for, where's their strike price? We actually don't have a strike price here. So what he says, $8, right? So he's got an $8 call. It's currently trading at $460. So the man is very, very in the money. So what we've essentially got here is, as the price of the stock goes up, the brokers and the more options that are currently written for it, the brokers need to buy more and more and more and more stock. So if you get lots and lots of people doing this, there's literal buying pressure from all of those call options. The higher that it goes, the more of the delta that they're currently exposed to, the more they need to buy. You can see how this thing becomes just a runaway train. And now you've got a situation where you've got maximum record shorts, plus you've got a huge inflow of people buying massively out of the money calls. That becomes an exponential buying pressure once the train gets moving. So there's literally not enough shares on the market to cover the shorts. You then combine that with a huge amount of call option buying, the delta starts screaming north, suddenly the entire option chain is absolutely in the money, and you end up with a short squeeze that I think is only just getting started. So here's the overall gist of what's going on. So because of these firms, they're essentially short, they owe the stock, and because they've borrowed it, they also have an interest rate. So because they now cannot buy, if retail do not sell their shares, because retail essentially they're people going long, they're on the other side of that short trade. If they don't sell, they sting the hedge funds in two different ways. One, if they just hold and nobody does anything and nobody buys anything, you're going to get interest payments that are going to keep building up and building up and building up, right? And the higher that the price goes, the higher the risk goes, the more margin's going to be needed, and you end up just bleeding the hedge funds out over time. So there's a time element. But the other thing is that because retail has essentially cornered this market, Wall Street Bets has cornered this market, which didn't actually require very much because there was so much of the stock that was already sold short. You've essentially got this system where the hedge funds are, in almost every regard, completely and utterly wrecked. There is no chance that they're going to be able to recover from this. And it's a case of magnitude. There is too much leverage on this stock, way too much in both directions. And unfortunately, having naked short, you now can't keep layering into the thing because there's literally no stock to borrow against to sell, and nobody will be crazy enough to be betting against what's going on right now. So some of these hedge funds are absolutely going to start getting wrecked. The more people that are piling into this, and the more people that, if you go on the Wall Street Bets forum, it is just an army of people saying, I am holding this to the end of the earth. You will not get my shares. I'm going to take you out, right? It is so much more than just a trade now. People are emotionally, financially, whatever it is, committed to this all the way, right? So, this is a very, very significant macro event. There's no chance that the hedge funds are going to get out of this. I think that they're in serious trouble, whether they sit tight or whether they don't. And obviously some of the actions that they took, which we'll look at in a second, were only just painting that picture to an even greater extent. So, this whole thing was very, very well engineered as a short squeeze. I pulled a little bit of data just to have a look at the magnitude of the short interest. So you got price there in black to the left axis. On the right-hand axis in the area chart is the short interest. You can see that in 2019 it really started to pick up, and it's essentially been over 120% for almost 2 years, which is just remarkable. And you can see that it got up to 150% at some point in time. And you can see here that we've got our short squeeze that's just killed the thing, right? It's gone from, here's $10, right? So it was languishing down here, down at $4, $5. We're currently sitting up here around $360. I think it hit $460 at one point intraday. So, we're talking about some serious coin on the line. And the short interest it's still not unwound. And in fact, I think that it's only unwound to something like 120% at this point in time. There's still a huge amount of short interest on this stock, even though it's trading up there at very, very high values. And by the way, most of the short interest was layered on, as you can see, down here at $10, under $10. Right, so the vast majority of this short interest, let's just take this end of the bell curve, is between 10 and let's say $6. I mean, these guys are 100 times underwater. Unbelievable sums. And what a crazy week, right? So this is just a map from CNBC, who's all complicit in this whole thing. Elon Musk's in there, GameStonk, right? You've got this point here where brokers start restricting trading, right? So then you get this massive sell-off. Retail basically rallied around and said, no way, we will not sell, we're going to hold. Robinhood starts to lift trading restrictions, and it just keeps rallying, right? So, this hedge fund, Melvin Capital, says that it's closed out a short position. I think they represented something like 10% of the short interest. So I could be wrong, 10, 20%. So even though Melvin Capital is the one that's all on the headlines, they weren't the major short. There's still another 120% of at least short interest out there for various other people. So there's way more firms that are going to get burnt out of this whole thing. And just FYI, look at the influence that Elon Musk's tweet has, right? We saw what he did with Bitcoin the other day. I mean, this is the market we're in. Single tweets just create volatility, create uncertainty. How on earth do you make economic decisions in this kind of environment? And GameStop reaches, $20 billion traded in a single day, eclipsed the entire market, everything else, right? The most traded stock on the entire day. So we're just talking about ridiculous, crazy money. This is back when it was $150. So, it is a genuine short squeeze that has retail in an absolute frenzy, and quite honestly, they're winning. They're winning with gusto. And this is where we get to the very, very unfortunate side to this whole story, and quite honestly, the thing that everyone rallied around, and I quite honestly I think is the reason why this has now become a movement. The reaction, and bear in mind that there's a lot of information and misinformation about all of this. Very, very hard to piece together what is real and what really happened. A few things that I'm aware of that did happen. So I think one of the first pieces of news is that Discord banned the WallStreetBets Discord. So citing hate speech, right? Very convenient for it to show up the day that GameStop gets on the news, but this is the nature of the beast. So obviously there's an element there. We had the Nasdaq head come out and say that they're going to halt trading. They should say halt, not half. They should halt trading to allow institutions to recalibrate their positions, citing market manipulation. So they're going to stop retail from trading this market and allow institutions to readjust their positions, because that's not insider trading, right? That's not market manipulation. That's not an unfair system. Robinhood, TD Ameritrade, Interactive Brokers, Cash App, all of these retail trading platforms, they basically turned everything to sell only. So they removed one half of the market, so they could no longer buy. They could only sell for a period of a couple of hours to a couple of days, depending on which platform you're on. Some of them even started closing out some people's positions, and they've now got trading restrictions that limit people to one share in some instances, but certainly limit how much they can buy. Meanwhile, all of the hedge funds and Wall Street have access to both sides of the market. So you have a whole bunch of people who are record short, illegally record short, and you take away the buy button from the people who are the only other side of that trade. And, there is nuance to this, which we'll touch on shortly. However, this is a huge, huge problem, right? This is an extremely unfair system. There is probably I would be very surprised if Robinhood makes out of this. I think Robinhood is probably done for. There's already class actions and things against it. But, this is how rigged this system actually is. Now, again, there is nuance to it, but nevertheless, it is not a free market when you can have one side of the business who's underwater, and the bigger dog, they can then turn off on these centralized platforms the buying side that goes against them. And meanwhile, you've got people saying on television that CNBC comes out and defends them and says, we're going to give them time to recalibrate their positions. Well, if retail gets wrecked, where's their time to recalibrate positions? Why doesn't retail ever get the same kind of courtesy that the big guys get? Right. So this is kind of the dichotomy that we're in. Naturally, WallStreetBets exploded and started posting hundreds of thousands of negative reviews on Robinhood and the like on Google Play and Apple, and over hundreds of thousands to 500,000 negative reviews were stripped from the App Store. So they went from a review of 4 point something to 1, and then they've jumped back to 4.7. So we've got mass media and these centralized platforms all stepping in to defend their buddies, essentially. There's way more layers to this. Robinhood, their business is free trading. So the way they make money is they sell order flow to Citadel. Citadel's the biggest owner of Robinhood. Citadel is essentially one who bankrolled Melvin Capital after they lost all their money. So, there's a lot of layers to all of this, but ultimately it has exposed a very, very rigged and corrupt system. And quite honestly, people have a right to be angry about all of this. It is a very, very serious exposure of the way that the world actually works, and the resilience and trying to shut this movement down is essentially the thing that's going to strengthen it around the board. And that's really what we've seen in the WallStreetBets forums is people are saying, you're going to try, but you're not going to stop it. So it is a fascinating thing to observe play out. And really, this is where it becomes more than just a trade, right? This is where WallStreetBets is sending a message. The people have found a voice in numbers. They've done a number of these open letters, and many of these letters are fascinating to read because they hark back to a generation of people who were burnt and forgotten and lost everything, or their parents lost everything in 2008. Right, and they watch the system just melt down, bail out the big players, and leave the little guy for dead. People felt the honest effects from that, and people are angry, and they're angry and have been for decades. And you can see this is here. So 7.2 million people are now on the forums. There's a class action lawsuit that's now going after Robinhood, and this happened within hours. People have obviously made quite a bit of money because you've got banners flying in the sky and then billboards being rented in New York City. This is what is coming, right? People have found the ability to coordinate and group together, and really social media is allowing this, right? So not only have we had the division that we've seen across left and right borders around election time, we're now actually seeing the opposite, which is people are rallying around a single cause, that is, please stop making our life really difficult and unfair, right? We're absolutely tired of it. So, it's a pretty fascinating thing to see play out. It's amazing that it comes back to trading a single stock, but it's the response to it that rallies people together, right? It's the unfair system that then gets even more unfair, and people are rallying to that sign. So it is a powerful movement, and as someone has said, it's Occupy Wall Street with teeth. So it is important to keep in mind some of the nuance to all of this, and this is where it becomes very, very difficult, and I certainly can't profess to be an expert or understand any of this in any great kind of detail. But my understanding is that there's a high probability that the trading restrictions that all these platforms put on were more a logistical constraint of probably very, very outdated trading technology. So yes, there is most definitely, I would be very surprised if there isn't a level of corruption and just sheer defending their rich buddies' backs, right? That is going to be in the mix somewhere to some extent. Most definitely in the media, probably in some of the shutting down of platforms and things like that. But there's also a very, very outdated and old securities clearance system. So, all these things like T+2, so trade take 2 days to clear. During that time, there needs to be margin and collateral posted, and there's settlement times and all this kind of stuff. It's just a really slow system. This is why security tokens are taking so long. And by the way, this is all a huge, huge benefit for securities tokens and instant settlement via distributed ledgers. That's most definitely on the cards now. Even Nick Carter, who's been skeptical of security tokens forever, has now come out and said, that's it. I get it. I see it. Security tokens are 100% on the agenda for their instant settlement. But really, a lot of this will have come from the slowness, the challenges, the logistics, the margin, the collateral, all of these things, coupled with a healthy dose of corruption. So, nevertheless, irrespective of any of this nuance, the people have essentially got their narrative. We know that the world operates on narratives. This will have all the shorters on Wall Street on the edge and quite fearful of this system. We're likely to see many shorts get closed out in the near term. I've seen some charts in the past, which I unfortunately couldn't find, but it was essentially showing how much of this rally since 2020 has been driven by short squeezes across all markets. Most people are looking at it going, the economy's wrecked. How on earth can the market be going higher? So they short it and they keep getting squeezed out of it. So, we're seeing record numbers of retail call buying around the world. Like all this kind of stuff is playing out. So we're going to see a few imbalances get even more imbalanced in the coming weeks, I suspect. And really what we have is a very, very fragile financial system. A group of, the Wall Street Bets movement really is exposing systemic risk. And what is the real fear here is we could get contagion. And that's contagion both of shorts getting out. It's contagion of if one of these hedge funds owes another hedge fund a lot of money, who owes another guy a lot of money, who owns what, when you've got 150% of the stock sold short, who actually owns the stock, right? Somehow they've literally printed stock out of midair. Madness, right? So it could get very, very hairy. There's a lot of nuance to all of this, but ultimately the narrative is what it is, and people are going to believe what they believe, and it is probably going to get hairy from here, and Wall Street is going to have to adjust to this new world, and I don't know whether the fragile financial system is quite ready for that, but we're soon going to find out. So I suspect there's going to be volatility and quite a bit of risk ahead. Somehow Wall Street Bets has ripped the curtain from the establishment. To be honest, it's quite shocking that there was any curtain left after 2020, but apparently there was some tatters left over, and to be honest, this is almost way worse than what we saw, right? There's just so many layers to all of this that are problematic. And if you look at any of the forums, it's quite clear that these Wall Street traders, Wall Street Bets traders, they're willing to hold to the death, right? They are going to take this thing all the way to zero if they need to, and by zero that means hedge funds to zero and GME to 10,000. this is a major injection of uncertainty and disruption into capital markets, right? This is some scary stuff. People are very, very angry, and quite honestly, it shows. I really love this top meme here. We lost 70 billion. You lost 70 billion so far. They're going to take this thing all the way to the cleaners. And, I do like this meme down the bottom here where it's, GameStop and the equivalents that I'm aware of in Australia, 100% raised us, right? And there is this very, very interesting thing of, GameStop being the pin, right? The pin that popped a very, very unfair system and gave people their voice back. So it's a very, very interesting, circle of life, if you want to call it that. So Wall Street Bets is certainly more than just a trading forum. It is a rebellion. It is a political movement. It is powered by memetics and narratives. The power of crowds and coordination is really what we've got on display here. And, they're coming up against the powers that be of media and Wall Street and all their crony buddies and centralized platforms and all these things. It's a multi-layered problem. And Wall Street Bets most definitely has teeth, right? They have all of these hedge funds up against the wall, and all of their financiers up against the wall. And I don't believe they're going to lose. I think it's going to get very hairy. I think the follow-on from all of this is, what is the cost of all of this? I think it's going to be pretty bad, to be honest. But the way I've described it, people have asked me, what's my overall view of Wall Street Bets and what's kind of coming. And the way I've described it is the systemic risk that's in the global financial system, I'm going to equate to, imagine a really, really big Band-Aid that's stuck to a lot of hair, right? It's going to hurt to take it off. What I think is eventually the Band-Aid has to come off, right? And there's a few ways you can do it. You can do it one hair at a time, which is kind of what Wall Street and the governments and central banks have been trying to do. They've been trying to, remove it one hair at a time. Meanwhile, someone else is sticking more Band-Aid down at the same time. But what Wall Street Bets has just come in and gone, look, it's going to hurt, right? It's going to hurt whenever we do it. And they've just pulled it. They've pulled the whole thing. That's it's a strange analogy, but that's how I'm envisioning this thing. The bubble had to be popped at some point. And I do think that Wall Street Bets has just come in there and grabbed it with both fists and just pulled as hard as they can. Right, and we're going to see how painful that Band-Aid really is, but that's kind of what I'm seeing at the moment. There's no question that it's a glowing recommendation for Bitcoin, DeFi, crypto, the whole lot. I think that if we see some volatility in markets, we could very well see a sell-off everywhere. Right, we see equities are really not responding very well to this whole week. We could see just a liquidity event. The DXY looks like it wants to go higher. I would be very, very cautious of leverage at the moment. Just be aware of the amount of risk you have on the table, where you're exposed. Who knows? We could get a crack up boom as all shorts just disappear and, we move into up only territory. But I think that the amount of money that's currently at stake and at risk is going to cause volatility at the very least. So that's kind of my overall summary. Beware that the Band-Aid could well have been pulled. It's probably going to hurt, but it was probably going to hurt at some point anyway. It could just be that it's accelerated to happen now, right? So we'll see how this all plays out. So I have 3 podcast recommendations. The last 2 are on Wall Street Bets. This one is more general to Bitcoin that I think is absolutely essential listening. So there was a debate on the Grant Williams podcast with Mike Green and Nick Carter. Really important to listen to. Mike is a deep thinker, very, very smart man. I think there's a disconnect that you can hear, particularly in the first half. So I'm going to divide the pod into 2 halves. The first half is very much Mike showing he doesn't quite understand the nuance of digital scarcity and value. He gets it, but he doesn't understand the depth that I think you need to. And I think that's a generational disconnect. He's looking at it, and Grant's looking at it from a macro investor for the last 30, 40 years perspective. They've seen the way the world works, and maybe rightfully so, they don't believe that it's going to change, right? They believe the powers that be will not allow something to change it. What I think Wall Street Bets this week has shown is that maybe that thesis could be wrong, right? Maybe the idea that the little guy can't actually just break it and say, well, look, we're going to rebuild this thing now, and it's not going to be on your terms, it's going to be on our terms. Maybe that is possible. So, I think that some of those mental models are probably true, but I also think that some models can be broken, right? I think that we're heading into a period of the unknown, and if anything is going to change the world, it's going to be the masses, right? It's going to be the people. And if the people choose to opt out en masse and they fight it, more people are going to opt out en masse, right? What we saw is they tried to shut down Wall Street Bets, and Wall Street Bets has now grown in double in size, right? We are in the period of digital viruses, and that's not a bad thing, right? We are the virus, and the system essentially is not immune to it, and this is what Wall Street Bets has pushed forward. The second half of the pod, I really urge you all to be very, very conscious about what they talk about here. There is a whole layer to all of this. I won't go into the Tether side of things. My view on Tether is that, yeah, they need to be more transparent. Personally, I'd never use it. I think Tether's a whole different issue, but ultimately, I look forward to the day that Tether just either releases their statement to say that they're fully backed or implodes. I really just want one of, pull that band-aid, please. Just get one of those two outcomes done. The more important side of it is the geopolitical and internal political side to Bitcoin. So the geopolitical one is essentially, how does a world of Bitcoin, if it does become extraordinarily relevant, how does it define the relationship between particularly China and the United States? I don't have a good picture of that yet. It's a very, very complex and nuanced case. It's something that they talk about that is worth listening to just understand the perspective, how it is a potential geopolitical issue. But the one that I found most poignant is at the very end. They talk about who Bitcoin appeals to. And in general, it appeals to a well-educated, disenfranchised, young, angry portion of the population. People who are smart enough and tech savvy enough to cause a problem if you get them offside. And, they've invested not only their life savings, but much of their mental capacity, right? If Bitcoin was taken away tomorrow, like quite literally, I don't know what I'd do, right? I've been looking at this thing, thinking about it, contemplating it, studying it for 3 years now, almost full time. How do I recalibrate? And it's one of the few things that gives me genuine hope that we can change things. How on earth do I recalibrate my position if that was taken away? And if you have that situation at scale, it's the exact wrong type of people that you want to be offside, right? You're taking away not only their life savings and their choice to opt out, you're taking away something that they've invested their mental capacity in, and those two things are very, very dangerous inside borders. So it is a huge risk. It doesn't mean that governments won't push for it, but it would be a hugely volatile event. So we already have a very angry youth, as this whole talk is kind of laid out. That would really, really fire up the masses. Second podcast, also Grant Williams' podcast, is one that they released this week. Unfortunately, this is the last one that will be free in public. And I get it, rightfully so. Grant Williams is going behind a paywall. Good for him. His content is excellent, but it's called Short Shrift. It's a conversation about the GME short squeeze with Mark Cahotis and Bill Fleckenstein, who are both experienced short sellers. Really, the market needs short sellers. They're the lions who take down corrupt, fraudulent, dying creatures in the financial system. And they discuss the nature of what happens if all the short sellers leave, right? What does that actually mean for the health and overall if you take away one of the alpha predators? So it is an interesting take, certainly worth listening to get a bit of perspective. And the other one's not really a podcast, it's an interview with Jim Bianco, who I have a lot of respect for. He's a very good macro thinker, big data guy. Interviewed by Financial Sense. I think you just probably Google the headline here, but he explores this possibility of contagion in the financial system that comes from this GME short squeeze. He identifies, what the hardcore and unwavering nature of Wall Street Bets, these people who are willing to take it all the way to the end. They're willing to take down whatever losses that they need to do to send a message, right? It's bigger than that. But he talks about what the risk of contagion is. He doesn't think it's at that stage yet, but it certainly has the possibility to turn into it. So a worthwhile interview to just get Jim's perspective and think about it all. So that's it for the week. It's obviously it's a big moment. We'll see what plays out and comes after this. I'm certainly expecting a lot of risk, volatility, and change in market structure. I would certainly be paying attention to when Rao releases his overview. I hope it's going to be some kind of video thing. It could be on Real Vision, I don't know, but I think that will be a useful tool just to understand where his mind is at. But I don't believe we fully understand the implications of what happened this week. I think we can see the trajectory, but I think that there's going to be some kind of risk-off event that probably comes out of this. Very, very likely we could have a Lehman Brothers event that comes out of this, or at least something that is so significantly defining of this particular cycle and era that it will become a historical event. Right? I think what happened this week was historical, and we're going to look back at it, and we're going to see more and more about what the knock-on effects of it was. So, I'm personally on the side of the Wall Street Bets thing. I think that they are acting as I would. At some point the band-aid has to be pulled, and clearly Wall Street's not going to do it, and people are tired of having one hair pulled at a time. So, I think that they could have accelerated something that was always coming, but it was always coming, So we'll see how it plays out. As always, I'm always glad to have a chat if you want to talk about some of these realities. Again, I'm not the be-all, end-all in terms of what I know. There's going to be layers to this whole story that I've probably got wrong. There's going to be layers that we'll keep finding out, but this is all kind of the best of my knowledge as to what could happen, what did happen, and what to expect. So look forward to seeing you in the chat rooms. Let me know if you have any other comments or questions, and I'll catch you in the chats next week. Cheers.